Hello traders, welcome to this video from Elite Currency. My name is Chris Forsick, and today we're going to take a look not only at the euro dollar, but pound dollar, gold, US 30, DAX, and Bitcoin and Ethereum, but also the overview basically of our system performances in February. We're going to take a look at all the results and review what to expect in March from our systems as well. All right, so let's take a look at the charts. It's going to be, of course, focused on technical analysis, obviously, and we're going to start with the euro dollar as always. So, euro dollar moving lower. Obviously, dollar strengthening due to the war and invasion of Russia in Ukraine, against Ukraine, creating a lot of well, let's say the typical dollar run when geopolitical events like that or events like that unfortunately happen. So we see the dollar strengthening, and that's typical, of course, for scenarios like that. So euro dollar is has been falling, has reached a low of 110.55. That's dollar strength, of course, in euro relative euro weakness. After it was all the way here at 115, so that's a pretty sharp movement. Your dollar has been pretty, in a pretty steep decline, to be honest, already. Before that, obviously, for half a year before that, falling 1,200 pips in about a half a year. That's a pretty steep move down. So far, we're still leaning towards price making a bounce. If this is a contracting triangle, and it remains a contracting triangle, maybe at the 88.6 fib, and 78.6 fib, of course, could be a level to reckon with as well, by the way. But so far, we haven't broken this bottom, and we'll have to see, of course, how the sentiment and the war conclude, how it's developing, maybe better said. But you can see that these are definitely strong support levels, and typically I would expect a bounce there. If this is a triangle pattern, looking at the weekly chart, we can see that this is a wave A, B, C, D, and E up, and we would expect to break down. Of course, if it breaks through this bottom, then it's not a triangle pattern, obviously, and in that case, we're probably looking at some other type of formation. In that case, we're probably looking at a serious downtrend on the euro dollar, and in any case, I would expect the round level of 100 to be hit in that case if we get a break below these bottoms here. Okay. Otherwise, a lot of insecurity at this moment. I think a lot of volatility, a lot of question marks. So definitely a difficult moment to make any forecast. I think it's very tough spot. But looking at the current flow of euro dollar, it seems to me that maybe some retracement back into 112.25, 112.50 at max. Otherwise, I would expect the downtrend to continue. It does look like it's retracing now, but after that retracement reaches maybe the long-term moving averages on the 1-hour chart, for instance, around the same spots I just mentioned, 112, 112.50. If it even gets there, I would expect the downtrend to continue. Looks like we're getting some retracement possibility, but it should face its resistance, and I think it turn back down for a next fall down to 110 for the moment. That's where the 78.6 fib is, and that could be a substantial level where price makes a bounce. Ultimately, it can go down to the 88.6 fibs. So something like this, a little bit of retracement, fall, some flag, and then fall, and then a bounce up. Seems most likely at this moment. If it does break above 112.50, then, well, definitely in a bit of a neutral zone still, I would say. Wouldn't be calling it an uptrend right away because we would need to have anyhow a clear higher high first, but it could change the dynamics, and we might see, I would say, a break above 113 and the locked moving averages on the 4-hour chart, and these bottoms would be needed for me to not consider it an uptrend yet, but to be more bullish on the euro dollar, at least back to the tops. I don't see that happening, but if it were to break above that resistance. So regarding pound USD, I do think that that looks a little bit more bullish in the sense that we talked about it before, that this looks like a swing up, and I wouldn't be surprised if there would be an ABC down to test the deep fibs and then a bounce back up again. Now, in the current environment, maybe such a strong bullish price swing to the minus 272 target is maybe too far-fetched. I don't know. But certainly the ABC pattern expected or occurred as we expected and took place there down to the 78.6 fib. So that was, I think, fine. Obviously, strong trend line here. So a break above that trend line could send up to the minus 272 target. But for the moment, this upside very vulnerable to a bounce at resistance, and still one more dash down to the 88.6 fib in my view. Okay. Bounce up here makes sense though, but I think we'll find resistance to test a little bit deeper. Dollar yen, a lot of dojis there. Doesn't look that interesting. Bitcoin made a bounce at the 88.6 fib. If we put the fib on this swing right here, you can see 88.6 fib very accurately at 34,000. Has been aggressively moving up ever since, facing resistance from the long-term moving averages in the previous stop. And that's always difficult with Bitcoin, of course. Momentum is on the side. It's not necessarily everything at this moment, but I think that all in all, when we look at the picture where we are right here, more of a bullish spot in my view, fundamentally, technically, from a price point of view. This looks like a wave A, and I would expect an ABC back up to one of these Fibonacci targets, and then a bounce back down again. So looks like there's some space for some upside in my view, and the same is valid for Ethereum, I think, although I wouldn't use this fib. But also probably wave A and B up, and then down again for C. So some space up within that wave B seems to be there. If this is a wave B, then of course, got to be careful. Bullish wave B are ideal traps to get stuck in long setups. So it still makes sense, I think, to trade to the upside in my view, but got to be careful of those targets, I guess. Okay. Now, doesn't just because that these are resistance levels doesn't mean that we'll necessarily see a bounce at the first target. Actually, price could go all the way up to here and still be a wave B. In fact, the higher price goes up, the more likely that the wave C will just end up at the previous bottom or even higher. Whereas if we have a wave B that ends up at a shallow fib, like at the 61.8 fib, 50 or 38, then it's more likely to be a zigzag pattern, and then the wave C will probably go deeper. But if the wave B goes above the 61.8 fib, then it's probably more of an ABC flat. In that case, it can go quite high to test the previous top, even break the previous top, to be honest. Although I don't see that necessarily happening, but it could still be a part of the wave B, as long as it stays below the 138.2 level. And then move down for wave C, but the wave C then should end at the previous bottom or even above it in my view. It could even be below the previous bottom, but that would seem a little bit less likely. All right. Gold, not surprising in times of war or war of that scale, I maybe should say, that gold is moving up and breaking through the resistance, and at about 1930. And some momentum there to be found, certainly so. And yeah, I think that looking for for some kind of pattern probably or break could make sense. It's looking pretty bullish, I think. Triangle pattern break would confirm the upside, I think. Stocks made a lower low, higher low, higher high, lower low, lower high, making it pretty bearish. There was some buying pressure though, as it made a lower low. Bit of an expanding wedge here, like I guess, but I don't think that's really that relevant, to be honest. Probably more important is the break, the bearish break, I should say, retest and bounce. This could be another retest. To me, it looks bearish. I see more selling pressure here. I see this as a kind of rounding formation, a reversal kind of pattern. Price is running out of steam. I think the uptrend is running out of steam. There are a lot of factors coming in here with regard to interest rate, inflation. First from, um, from basically maybe COVID and the economy picking up speed, and now also from metal, from basic commodities and um, all kind of uh, energy resources that are getting more expensive, of course. So um, a lot of price levels are going up. Inflation is probably going to go up. So that poses a negative effect on stocks. Eventually, it should. So for not all stocks, obviously, we're talking about the general stock market. For some stocks, it could be good. Maybe some energy companies, obviously, could benefit for that. But yeah, I think that it looks more like a retracement to the terrain or formation or pattern down to the long-term moving averages at the very least here on the weekly chart. And after such a long bull run, that would not be so shocking in my view to see that happen again. Last time it did that was with the Feb 2020, 2 years ago, when we had the COVID-19 outbreak. All right. Same thing for the DAX. It already reached the long-term moving averages. It's slightly more bearish than US 30, as you can see, and it's retracing lower. Here, probably would even look at. I think there is some support zone here, and that could certainly play a role in a bounce, but ultimately a break below and close below the long-term moving averages could even send this lower to the long-term moving averages on the monthly chart. All right. That said, let's take a look at the performance of last month. All right, Soussier had a wonderful month. In fact, one of the best months I've seen. Again, positive. This system has had only positive months for years now. It had some drawdowns, of course, but obviously, um, but only in an intra-month perspective. So that's very impressive. And again, plus 5.8% here with Zeus rental version and the PAM version, even almost 10%. One of the best months we've seen so far, and very good sturdy gain despite all the turbulences that we've seen in February. So on average, about 7% there on the Zucier. Very happy with that. We basically saw great results across the board with our systems. Some systems more than others. SWAT, for instance, just made 1.2%, so it was a bit weaker performance, but all of them were positive. Portfolio made a great 6.5% closed profit, bringing it above the 40% level now. And then we had ECS Athena making some profit but less. As you can see, the outbreak of the war basically saw profits disappear because of that. We were headed towards a nice month with more than 5%, but the profits were lost with that because the EA was stopped with the rental and the PAM. So yeah, some of those profits were lost. Some traders didn't trade at all already for a longer period of time, so they would be also around break even. So yeah, in some cases on lower time frames, maybe even losses could have been experienced, some slight losses. We didn't see that with these accounts. It depends a little bit on the time frames. if one is trading on a 1 minute chart, of course, there's more vulnerability to experiencing losses than on a 1 hour chart or 50-minute chart. 1 and 5 minutes are certainly more vulnerable. I think that is logical. We don't trade that, in those time frames, but anyone who would, um, that's just more vulnerability there, of course, when such events happen. So here +4, and here we have +2.9. All right. All in all, though, a little bit smaller profit, obviously, a lot smaller on the Athena EA than we're usually used to. It's about +2.5% on average, but still positive. And we're still waiting with this Athena EA for things to settle down a little bit before restarting. We haven't restarted yet. So let's see, no rush. We don't want to rush into things. Better wait, be patient. And even if it's 1 or 2 or I don't know, even 3 weeks, better to wait for the better moment or the moment that makes sense than pushing it too quickly. The other EAs are not paused or not stopped. Our other systems, I should say, and are continuing with trading. And especially Portfolio and Zeus had some great performances there. Let's take a look at the total performance of this. Somehow it seems to be a little bit frozen. Okay, here we go. +101 up to today in 2 years. No, what? 2 years? No, 1 year. Sorry, 1 year. Yes. Doubling the money in 1 year. And here with the Zeus EA +47% in 1 year. This PAM 100%. So great results there. SWAT EA also a little bit more than a year. That's almost 70%. So Zeus EA is beating it 100 to 70 with the PAM, and with the rental version, it's about 50%, let's say, in a year. So then we have the portfolio. It's up 40%, and Athena EA. We'll check it right now. Let's do it together. Almost 100%, but that's not in 1 year. That's in 6 months. So you can see that Athena EA is more aggressive. The returns so far have been outpacing other systems, but of course, there is more risk. Obviously, with more reward, usually there is or should be more risk on average, and something to be aware of course. But certainly the 92% in August, September, October, November, December, about 6 months indeed. Yeah, if that continues at that pace, obviously, then this is going towards the 200% in a year. So it's obviously does offer the potential for more reward as well. All right. Now, with regard to any updates from Elite Currency, let's check out the website. All right, feel free to take a look at products where you can join managed accounts where the trading is done by us, Elite Currency, or signals and EAs where we deliver some tools and you manage them. You can check out, of course, research and education with blogs, education webinars and events, and take a look at all of the options here, including donations, and of course our EAs, options trading for Marcadoni as well, research and education, not webinars, but blogs and education articles can be found here as well. So a lot of good stuff. I hope that you check it out. Otherwise, from a announcement point of view, nothing to add at this moment. So we'll leave it at that. Wish everyone great trading, a great month ahead, and I'll see you in April. Cheers. Bye-bye.